Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is August 30th. The U.S. dollar is moving lower. It's now lower against all the major currency pairs on the day, leading the way in the rankings for the major currency pairs. First, take a look at the euro versus U.S. dollar. The price has moved above the 50% retracement of the move down from this high. This is the August high to the August low. That level also corresponds with a swing area near the 1.0911 and 1.0917. More importantly, the price is back above the 100-day moving average. The last time the price tested that moving average, it found willing sellers. Over here, it also found willing sellers after a brief break above that level, moving to the downside there. So staying above the 100-day moving average, staying above the 50% retracement is now more bullish for the euro versus U.S. dollar. A move back below the 100-day moving average would probably disappoint the buyers looking for more momentum on the break of that key moving average. The 61.8% retracement 1.09501 is the next target on the top side for this currency pair to get to and through to increase the bullish bias. Let's take a look at the dollar versus yen, and this pair is now moving below the 50% midpoint of the move up from last week's low to the high price that we saw in trading this week. That 50% retracement comes in at the 145.95, and as you can see, the price high after moving lower, making the new low, came in, found willing sellers against that level, and is pushed to the downside. We were also below the 200-hour moving average. That 200-hour moving comes in at 145.887. So for traders, the risk level for sellers, and the sellers are more in control, is a move back above these two technical levels at 145.88 to 145.95. As long as the price can remain below those levels, the sellers remain more in control. Getting back below the 61.8% retracement is still needed on the downside at 145.618 to increase the bearish bias and that perspective. Let's take a look at the sterling versus U.S. dollar on the 4-hour chart. We moved above its 100 bar moving average. That's the blue line in this chart. Currently comes in at 126.93. And as long as the price can remain above that level, the bias remains more to the upside. On the top side, we do have the 200 bar moving average and the 38.2% retracement around the 127.74 to 83-ish type area. That's of this move down from this high. This goes back to July, the July high to the low price that we saw in the month of August. Getting above that level would be the first time since these days right here back in at the end of July, early August. So all month the price has been below the 200 bar moving average on the 4-hour chart. Get above that level, that's the next key target, would be a more bullish bias for this pair. Don't want to move below the 100 bar moving average. However, that would disappoint the buyers in this currency pair. Let's take a look at the dollar versus Canada next on the hourly chart. And if we take a look at this, we moved up yesterday to test the high price from the I guess that's Monday. No, this is last Friday's trade. Could not get above that level and found willing sellers, and the price moved below the 100-hour moving average and 200-hour moving average in the process. In trading here today, we moved back above the 200-hour moving average, but could not get above the 100-hour moving average. And as you can see, we've rotated to the downside here, getting below the 38.2% retracement. That's good, of this move from the most recent low to the high here, this trend type move. So if the price is able to stay below at 38.2% retracement, that would be more bearish, and we'd have traders looking toward the 50% retracement level at the 135.05 level in this currency pair. So sellers in control there. The Aussie versus US dollar, breaking to the upside here. We got above the swing highs from last week and the swing high from yesterday's trade at the 0.6487 level. That's going to be a close risk. If as long as the price can remain above that level, it's more bullish. But we do need to get to the 38.2% retracement of the last trend move to the downside in a trend move. If the price can't get above the 38.2, the buyers aren't really winning. They are just correcting in what is a trend move to the downside. So getting to and through 0.65378 will be key. As long as the price can remain above 0.6487 in trading here today, the bias remains more to the upside in this currency pair. Finally, let's take a look at the New Zealand versus US dollar on the hourly chart. And like the Aussie versus US dollar, we are moving to the upside and breaking above this swing area through here, where we have just a number of different swing highs here forming this ceiling, including the high price from last week. And as you can see in trading here today, we moved above that swing area and then came down, retested the low of that swing area, and are moving higher. If we can stay above this area between 0.5985 and 0.5996, the bias remains more to the upside, and we'll start to look toward this swing area through here. It's sort of a modest swing area through here where we are at different swing lows and then high before moving to the downside. So get above that, and for this pair, we do need to. There's still a lot of room to the 38.2% retracement of this last move to the downside. As you can see, it goes way back in time. That's way up here at the 0.60856 level. Long way to go until we get there. Well, not really. It's really only about 85 pips from here. It just seems a long way. But we do need to get above this swing area, and then we start to look at these other levels before opening the door to that retracement level. Close risk is this swing area right here for the New Zealand versus US dollar. As long as we stay above the 0.5985, the bias remains a little bit more to the upside in the short term. My name is Greg Mikulowski. Good fortune to trading. Bye-bye now.